Alright, welcome to July 22nd, 2024 live stream. Let's get right into it. Well, actually, let me start off with setting up the live stream chat. So it appears that on NQ we are attacking previous day high here. Coming into like the morning here, I was wondering if we were going to disrespect this hourly FEG and close below it and use it as resistance to continue lower to attack previous week's low. It was either that or we respect this 4-hour FEG here. We had this 4-hour FEG that is now turned into a inversion fair value gap, and we didn't treat it as resistance. As you can see, we traded into it, we traded a little bit lower, and then now we got a closure above it. So that isn't bearish price action because we should have used that 4-hour FEG here to attack previous day low. But I'm still bearish into this week, as at least going into this week, because my weekly objective is still previous week's low. It's just intraday price action right now. It looks like we could be retracing into, we could retrace back inside this daily FEG here, and then continue lower. But like I said, I still am favoring the downside. It's just a matter of when. So if you think this in terms of how the weekly candle is going to open, we can see it as this is manipulation. So we have an open, high, low, and a close, because we're anticipating this weekly candle to be an open, high, low, close, correct? Candle. So we're creating that manipulation, like that wick up right now. So open, high, low, close. So coming into this morning, at least the morning objective for me would be to take out previous day high here, and here you can even look at you can even see how we have this 10-hour, 4-hour, or sorry, this is a 10-hour, 6-hour, 8-hour FEG that we could rebalance. This is rather, this is like a short-term market structure shift, bullish, but like I said before, I am still bearish on the higher time frames. So just coming into this morning, as of right now, I would like to see us attack previous day high, and however we trade from there is up to prices. If prices wants to respect that 10-hour FEG again and continue lower, or will we dig into that daily FEG? I should actually mark out the daily FEG. One thing that I did note here is look at the respect of the weekly consequent encroachment here. Weekly fair value gaps, consequent encroachment. We came right into that weekly consequent encroachment, and we traded higher from it. That is just something to note. But yeah, I don't think, it's just, I guess this is it is algorithmic right here that respected consequent encroachment, but I don't believe this is the low. I still am anticipating for us to attack previous week's low, but like I said, it's a weekly open, high, low, close candle, so we are creating that manipulation leg, and I would still like to see us attack previous day high here. and maybe even rebalance more of this 8-hour FEG. Yeah, we also have this 10-hour FEG too that we can rebalance after retracing into or taking out previous day highs. So just something to watch out for. One thing I do want to note out here is this 4-hour FEG here that I'm noting out right now. I do believe that this is going to act as a breakaway gap. Because of where we're closing, I don't believe we're gonna open on this very next 4-hour candle and retrace into here and then take out previous day high. I believe we're gonna treat that as a breakaway gap based on my fair value gap theory, and we're gonna open maybe a small move down and then take out previous day high. After we take previous day high, that would be the morning objective for me, and I would just like to watch and trade intraday price action. But yeah, it looks like ES also as well didn't take out previous week's low, so there's no SMT there. And like I said, I would still like to see lower prices, so I believe this is just the wick higher on a weekly power of 3. So there's the opening bell on a Monday. Oh, let me look at the economic calendar with you guys, and then so no news coming into this week. No news coming in, or not no news coming into this week, or no news at least coming into today, which is not the best, because we don't have that much. Like I said, I would prefer to see us have some sort of volatility to be brought up into the markets, but it's a Monday morning. Don't anticipate too much. And see, this is what usually occurs on a Monday morning, is there's going to be like some sort of one chart will be going higher and the other chart will be continuing lower. It's just kind of sporadic. But yeah, I don't usually trade the first 30 minutes of the day anyway, so yeah. Or 30 minutes of the open at least. And after taking out previous day high, I would stay, like I said, after we take out previous day high, I would just trade even lower time frames, like the 15-minute and 30-minute model, cause we don't have a higher time frame objective anymore. If we do end up taking out previous day high, this idea is squashed if we retrace all the way back into here, take out London lows. If we take out London lows, that idea of taking out previous day high is completely out the window. So here's the morning, that's the morning, Monday morning open right there at 8:30 Eastern time. We do have this really small micro hourly FEG here. I'll note that out. Well, actually, I don't really need to know. You can see it right here. See those small little gray boxes? That is a fair value gap. And this is an hourly chart. So we had, you know, that really small hourly FEG here, and we have this quite, you know, a little bit larger FEG, hourly FEG down here. Let me see what I have in mind for the stream today, but so I do want to go over my risk management plan here, things I can improve on coming into this week, just from based on what I gathered from my you know, reflection. So things I can improve this week is and I'm gonna do this daily as well, just so it can be like, you know, really ingrained into my head. But the first thing that I can do better this week is I will follow my risk management plan, and I'm gonna review which risk management plan I will follow every day on the stream, and I'll decide. So today I'll probably be trading with the more trade. I'll be trading more, you know, normally. I'm not gonna be de-risking myself or anything like that. I'll just trade regular size. And the second thing I could do better this week is when taking a 15-minute power of 3, I gotta consider, you know, why did we create that power of 3? You know, did we tap inside this, you know, 1 hour hourly FEG, and we had a bullish 15-minute power of 3 to where I can target the 15-minute high and the expansion higher, something like that. Next thing is, so to recap, that is basically the second thing I can improve on is why did we create that 15-minute power of 3. That's just something that I should be, you know, considering and thinking of whenever I am in a trade, essentially. So my third improvement this week this third thing I can improve on this week is I can only trade a power 3 model without knowing essentially not knowing the why, but I don't really have to consider it too much if if the power of 3 model is aligned with another time frame. So if, let's say, my 15-minute power of 3, it's also aligned with the 30-minute power of 3 and the hourly power of 3. That means there's 3 time frames aligned with each other. I would take that without essentially knowing the why. And the fourth thing is that this is more of a technical issue, but I'm just gonna switch my NQ charts to MNQ, which I did here. So now I'm charting on the MNQ and also trading on the MNQ. This just allows for, you know, efficient trading, so I don't have to go switch back and forth between charting and actually executing a trade. And with that, that's going to be my 4 things that I can improve on this week. And let's get right into the risk management part of the morning. So, like I said, coming into this morning, I'm going to be trading micros normally. So I'm not going to be de-risking myself or anything like that. I'll just be trading normally. So the first ever trade this morning, I will be either trading a $480 maximum. I will be trading with a $480 maximum stop loss on the first trade if the risk to reward is a 1-on-1, and I'll be trading with 720 as my maximum stop loss if my risk to reward is a 1 to 1.5 or higher. So like if it's a like a 2 order R, right, I'll be risking 720 maximum $720 as my maximum stop loss. So my second trade, so let's say I win my first trade, right, and I win 500, right? If I win my first trade, I will risk I'll risk basically half of the profits I gained from my first trade with my second trade. So my second trade, I'll be risking only $250 as my maximum stop loss. If, like I said, I win 500, if I make 500. But if I lose my first trade, then I'll be only risking $240 if the R to R is a 1-to-1, and if it's a 1 to 1.5 or higher, I'll be risking $320 as my maximum stop loss. And third trade of the day, and this is if I even get into my third trade. If I win my first and second trade, right, I'll be only risking a half of the profits I gained from my second trade. So let's say let's say I made let's say I made 300 on my second trade, right? I'll be risking only 150, and if I lose my second trade, then I'll be only risking $120 as my maximum stop loss if it's a 1-to-1 risk to reward. And if it's a 1 to 1.5 or higher risk to reward, then I'll be trading with $160 as my maximum stop loss. I cannot take any models that's below a 1-to-1 risk to reward. And R to R, my risk to reward should be set to where I take my first partial or break even. At least my target is. So my target, my TP will be at where I take my first partial, not where my terminus is. So even though, like, let's say here on this example, previous month's high is a draw, right? But since I'm taking this trade based off of the 15-minute power of 3, I'll be taking either my partial at the 30-minute high here. So this risk to reward wouldn't be a 2.8. I'll push this I'll pull this TP down here, so it'll be maybe like a 1 to 1.3, maybe somewhere around there. So my terminus isn't where my full TP is set at. And whenever I take a partial, whenever I'm trading normally, I'll take off whenever I'm trading normally, I'll take off half of the position size. So if I trade with 20 contracts, right, and my partial gets taken or gets hit, I'll take off a half of the position. So if I'm in the trade with 20 contracts, I'll take off 10, and then after I take 10, I move my stops to break even. So here's an example right here. So an original position size of 20, right? My partial gets tapped, so I take off 10%. I take off 10 contracts at the first partial, and then I move my stops to break even, and in the next TP I'll take off 5, and then whenever prices hits full terminus or my terminus, then I'll consider taking off the full position. And yeah, with that, I'll probably call it this is it for me. Like I said, I'll be trading a little bit more aggressively coming into today. Yeah, so going back to the charts here, I actually was watching it charts from another screen here, and I noticed how look at how we retraced here. We had a deeper retracement. We can, like, you could have seen this as an order block. Prices taps into this 30-minute order block and has a displacement away from it, or just prices higher away from it. On the 1 minute time frame, we create this this structure here where we dip down, manipulation, and we price up higher. Like I said, previous day high is my draw of liquidity, so that's not going to change. Let's look at the 3-minute time frame, 2 minute. Yeah, so we had this 2-minute FEG here that we retrace back inside. 4 minute, and there's no 5 minutes, so I'll just leave it like this. And yeah, once we take out previous day high, that would be my higher time. That would be my daily objective, at least, and my morning objective. You know, maybe we could rebalance this 8-hour FEG here. You know, rebalance it and see how we would trade from there. But like I said, I'll consider trading intraday models instead of you know, having a daily objective in mind, because after we take out previous day high, that would be my daily objective. Yo, what's up, Day? How you been, man? How was your weekend? How was your weekend, Day? Now, I was really zoned in there, so I didn't have chats put up, but welcome in. Welcome. Hey, I appreciate it. I appreciate you tuning in for today, man. But yeah, we do, like I said, we do have that 8-hour FEG here, even on the 10 hour as well. So let me mark out that 10-hour FEG. So we have that 10-hour FEG, and like I said, once we take out previous day high, I would, you know, set up some standard deviations, and I would like to see us maybe rebalance this entire 10-hour FEG here. But we do have 15-minute closures in about like 5 minutes, not 4 minutes, 3 seconds, 1 second. So here's the next 15-minute candle here. It looks like we probably will attack previous day high. By the time we even open at 10 o'clock, which is a little bit unfortunate, but you know, you just gotta be content with whatever occurs. So here we have about another 15 minutes left till the 10 o'clock open. So with that, I'll probably be on my toes, and if prices does take out, you know, previous day high, then like I said, I'll be trading intraday models. I'm not really willing to risk anything for, you know, first thing in the morning or first thing in the week. So yeah, from there we'll just watch and see how prices react after we take out previous day high. So there is previous day high taken. So previous day high is now taken on NQ. Let's see if ES can play catch up. But like I said, after we take out previous day high, you know, we can set up standard deviations to find out the manipulation leg. We can, you know, rebalance this completely, this 10-hour FEG here, and maybe even attack these highs. But yeah, let's see if we can even make it up to this hourly FEG here first. This one right here. So let's take a look at the standard deviation. So here I'm not using the, you know, the highest wick or the lowest wick. I'm actually using the bodies. You can do that with standard deviations, or you can use the highest up close candle in this 1 minute chart and the lowest low of the down close candle. But I think I'm just gonna stick to using the standard deviation because it aligns with the a new day opening gap here, and let's see if it aligns with sell side levels, existing sell side levels. So this is let me mark this out as July 18th, the high of day. Oops, not 28th, 18th. so let's see if we can, maybe there will be, what the heck? Why is my thing so weird? So there's a complete rebalance of the 15-minute, or I'm sorry, the 10-hour FEG. And it looks like ES just took out previous day high as well. So let's get a clear depiction here. I swear there was one that was actually aligned with that high. Okay, so there is one standard deviation that aligns pretty well with the 7/18 hive day, or 17 high, yeah, July 18th hive day. Let's see if I use the wick of this manipulation leg lower. Sunday morning. Okay, yeah, I'll probably just use these. This standard deviation, because this -4, like I said, aligns with existing sell side levels, and this -1 actually aligns with a new day opening gap. So I use these as projections to see how high we can go. Yeah, we have about 10 minutes left till the 10 o'clock open. So let's see what we do from there. This is interesting. So why, like I said, this is why I don't trade the first 30 minutes. Look at YM dropping lower, and look at how ES and NQ are pricing higher. It's just really sloppy PA. So based on this, based on how this 4-hour candle is closing here, like I said, I can treat this 4-hour FEG now as a breakaway gap, and our 4-hour objective is to take out that 4-hour high. Taking out that 4-hour high would be the objective for this 4-hour candle, and that would be, like I said, intraday models. That can be like, that's like an exactly that's basically what I mean by intraday models. So every time frame has an objective. It just depends on if you can align yourself with that and whatnot. That 30-minute candle, jeez, that 30-minute candle does not look favorable at all. We still have 2 minutes left, so not favorable action. Alright, so there's the 10 o'clock open. Like I said, I would like to see us take out this 4-hour high here, but on the 15-minute time frame, it is telling me that we're not going to take out that 4-hour high right now. That's just what I've came up to in conclusion, is that we're not going to take it out right now, but anything could happen. But let me just note out the 4-hour open here. So there's a 4-hour open, 10 o'clock. There's that. So like based on this, just 15-minute power of 3 here, we can anticipate for us to, trade lower and attack the 15-minute low, which we just did there, which we just did there. For us to really get a retracement all the way back inside this 4-hour FEG would be, how do I explain this, would be really, that means we would, or quite bearish, because just based on this 4-hour closure here, am I anticipating for us to take out this 4-hour candle's low first or this candle's high? I would have liked to say that we're going to take out this candle's high first, but if we get a retracement back inside this 4-hour FEG, we should respect that 4-hour FEG and continue higher. But if we aren't, and we get further even below, then I would switch my priorities and my my objectives to London lows and Asia's lows. But here, just coming into this morning as of right now, or coming into the 10 o'clock hour, I don't really have much of I don't really have anything to structure my trade off of. Like I said, we took out previous day high already, so I'm probably gonna stick to intraday models. But if we can get displacement to the downside, then I can consider targeting maybe London lows and Asia's lows, because they're still intact. And we have this 4-hour fair value gap to rebalance, but like I said, just based on the candle closures here, and we should treat this as a breakaway gap, and we shouldn't retrace back into it. Anything could happen, we could even retrace back inside this hourly FEG here, or this 1-hour FEG. ES is selling off. Here's ES. Here's the ES chart. It appears like we tapped the previous day high almost exactly, and price tapped lower. So a lot of people there supporting resistance, they probably would have taken something like that, but you don't want to see resistance, or like this black line here as resistance. You want to see it as a target, just to make things a little bit more that's how us as ICT traders we trade. We don't see this as resistance, we see it as a target, because we're targeting support and resistance traders. What strategy? Star. And I don't know if this is star as in like someone I know, but it is dope to see another new face on the channel. But the strategy I use to enter a trade is a fair value gap. That's my PD array of choice. If you study ICT, then you know what that is. But if you don't, basically a fair value gap is something like this. It's a three candle pattern. A three candle pattern, and let's say this is the first candle, right? Oh, okay, Josh, I didn't know if I have a friend named Star, and he just joined my Discord, so I don't know if you were him or not. What's up? Do you know what a fair value gap is? Do you trade ICT concepts, Josh? Just so I can, get into tune with who I'm actually talking to, just so, I'm not gonna be saying anything that sounds like nonsense to you. Okay. Oh, that's what's up. Okay, yeah, that is my strategy. That's how I answered. That's how I go into a trade. Is I base, I enter off of fair value gaps, and I'm just targeting basically the highs and lows of candles. Sometimes I would target an hourly high or an hourly low. It just depends on what the setup is allowing me for. But here on the in the charts right now, it appears that we are retracing back again on this price leg up. We don't really have lots of fair value gaps. It's not this one's tiny on the hourly here, and this quite relatively larger one. But I want to see us respect them and to continue higher and take out the 4-hour high. And not only is that the 4-hour high, but that's also the 8-hour high. You can see this as a market structure shift right here. Just it's not a market structure break, but market structure shift. So I can see us taking out that 8-hour high. But like I said, we would like to see confirmation of that on the lower time frames. So let's just and have a look here and see what happens. Because I'm trying to find a strat I can stick to and faster. That's good, dude. One thing I would recommend is you gotta become a one-trick pony. You gotta really you don't want to be hopping around, even on the ICT concepts as well. You don't want to be hopping between entering off of order block. You want to stick to one thing and really understand it. I think that's the best way to go at it. And because I have a video that I'm gonna be releasing soon, probably next month. But I talk about how ICT introduces all of these entry patterns, breaker block, a mitigation block, an order block, fair value gap, new day opening gap, new week opening gap. He gives us a lot, and you don't want to use every single concept that he introduced, but you want to use them as a narrative builder, but you don't want to use every single PD array that he introduces as a entry pattern, because that just doing that, you're taking a lot of trades. Let's say you see every there's a thing where it's when you have too much of something, it can be a bad thing. And I think this also goes hand in hand with trading as well. Whenever you have too many entry patterns, you have too much things to look for, and that just allows you to get into too many trades, if that makes sense. And you don't want to be taking too many trades. You want to be taking only the A+ setups. You know, the entry is just a part of the actual trade plan itself. You have to have it. You have to have objective. You have to understand why prices are going where, and your entry pattern is just basically allowing you to get into with the flow of the market. But if you have too many entry patterns, you're gonna be seeing a lot of you know, trade plans or like narratives, I guess, and not every single one of them is going to be A+, right? Not every single trade is going to be guaranteed. So, which is why I like limiting to just one entry pattern. It allows me to, you know, stay clear of taking, you know, maybe like 20 trades a day, because like it's just not something that I would prefer doing. It's just not, yeah. Has fair value been good to you since you've been trading? Yes, dude. Here, let me. It really helps a lot because I feel like let me tell you why I choose fair value gaps. I feel whenever I enter off of a fair like whenever I chose, you know, fair value gap as my entry of choice, fair value gaps are, you know, they're objective things. They're literally things that everybody can see. The reason why I don't like using order blocks, or the reason why I didn't choose an order block or a breaker block, is because they're subjective almost. Like, people can see this down or this up close candle here in a down move as an order block, but it's just, you know, well, what if this, you know, people can see this as an order block? They're gonna ask you, like, is this an order block? And then some people will say yes, some people will say no. It's just, I think of that as too, like, subjective. And look at this. Isn't this a breaker block right here? You know, low, high, lower, low, higher, high. This should become a breaker block. Now this should be, you know, treated as support, right? People, whenever prices trade back inside this breaker block right here into this, you know, unicorn pattern with the fair value gap inside it, we should long there. The thing is, for me, I just found that that doesn't help because it's not objective. It's not like concrete. A fair value gap, you cannot come up with a random fair value. If I tell you, look at the 946 fair value gap, it's this one. There's no other fair value gap that you could have seen. It's literally this one. It's what price is created. Like, this is a fair value gap. Like, there's a gap in price. There's inefficiency in price. That it's clear and cut. There's no, you know, this and that. And what I'm going on is that with this is that I like concrete, objective things. I don't like things that, you know, you can that can be skewed in a way or whatever. I like things that everybody else can see. It just makes a lot of sense. Like, it's almost like support and resistance. You know how you know, you look at prices. Someone's probably gonna be like, okay, look at the they're gonna be like, yo, dude, you see that you know, trend line, what is it? Trend line resistance, or I don't know what it's called. Trend line resistance, or trend line resistance. It's too subjective. Like, is this how you draw your line, or is it like, you know, you use the bodies like that? To me, it's too subjective. I've always liked objective things. It's just, that's just how like who I am as a person. and it just, you know, really aligns with how I do things. And I use, you know, fair value gaps in confluence with power of 3. So like I said, this 4-hour candle right here, right? If we look at this 4-hour candle, what can we anticipate, right? We can anticipate for us to take out this 4-hour candle's high and leave this 4-hour low intact. So that means we shouldn't retrace back inside this fair value gap, and now it becomes a breakaway gap. But are you going to enter purely based off of that? Well, on the 15-minute time frame, look at this 15-minute candle. This is that 4-hour high, but look at how this 15-minute candle closed. It's, we're not like looking at how this 15-minute candle closed. We're not going to take out that high yet. It looks like we're going to take out that 15-minute low, and, you know, price lower, maybe price into this 30-minute FEG or this 1-hour FEG. But what I'm going on with that is it's not going to happen yet, because every time frame has an objective. And if once you get all the time frames aligned with one another, that's when you can actually, you know, that's when I take my entry, is when they have the same objective. So even though I was bullish on the 4-hour candle here, and, you know, I'm anticipating for us to take out this 4-hour candle low, or sorry, 4-hour candle high, on the 15-minute time frame here, it doesn't look like we're going to take out that 4-hour candle high just yet. It looks like we're going to take out the 15-minute low and rebalance price. Even on this 30-minute too, like look at this 30-minute candle. It's almost like a indecisive candle. I can't really structure a trade based off this 30-minute candle, but I can with this 4-hour candle. So that means the 30-minute and the 15-minute, they aren't aligned with the 4-hour objective yet, just yet. I bet I'm gonna trade off fair value for a month. Based off fair value, you need more confluences than just a fair value gap, but that's just really just the beginning. Yo, Josh, if you want to, I feel like I'm gonna plug. I feel like I'm a plug, right? Not plug, but like I'm plugging my channel. But you should take a look at my YouTube and watch my day trading strategy. I literally posted. I have my entire strategy on YouTube, and just watch some of the videos. I know some of the videos, they're not, you know, they're not made the best, but but like I said, you should watch some of the videos and see how I actually view the market, because it's not just, you know, fair value gap. I use, you know, power of 3 as well in confluence with fair value gaps. But yeah, if you have any questions, if you do want to watch the videos and you have any questions, then, you know, you can come and ask me. I don't know if you're in YouTube, in the Discord channel, so yeah, if you have any questions, you can just come and ask me on there, and I'll be happy to answer your questions, because I feel like you actually do want to like learn. Like, that's good. All right, I'll take a look there, and yeah, I'm in the Discord. Okay, that's what's up. Yeah, so I'm assuming you're Star. I'm assuming you're this one here. Oh, you have mutuals with some people. Oh, you're mutuals with my Shintogi and some dude that has a Shanks profile. Huh. Who am I friends with that has a Shanks profile? David. Josh. Do I know this person? Dude, I feel like Huh. Oh, okay, I don't know, but yeah, that's good. I appreciate you considering my my offer, my friend. Nice. That's good. That's good. Let's see what prices is done on the 1 minute chart. Yeah. And the reason the reason why I note out this, the 10 o'clock open here, it's because if you apply the thinking of the midnight opening candle, so this is the midnight. This is the daily candle, and I like having the midnight open just so I can see where it's at. You know how ICT says you have to buy below the open, sell above the open. So if you apply that to every single candle, it literally gives you a brand new objective or view on prices. Like you see every single candle's objective now. And here I noted out just so if I do have a trade, I want to structure it around the 10 o'clock open, because I want to buy below the open, right? And I want to sell above the open. Josh from school. Freaking, oh my gosh. Why the freak is your name Star, bro? I thought you were Star from... You know what I'm talking about, Star, right? Dude, I thought... Damn, I can't even see your emote. I feel like on your YouTube profile, I could have seen as... That's crazy. Bro, how you been, bro? How you been? How have you been? That's crazy. I didn't know that you picked up trading. That is... I did not know that you picked up trading, bro. That's so interesting. Man, alright, man. When did you start getting into trading? Man, alright. That's good. That's good. That's good. Oh shoot, let me put out the freaking daily quote for today. I forgot. Motivational quotes to start off the week. CYDA. Me too, bro. What do you mean by me too, bro? Yo, me too, bro. Who's CYDA? We got freaking Kanye in the chat. What the fuck? Yo, y'all's whole group started y'all's whole group started trading. That's crazy. Are you in the chat too, Kanye? Oh my gosh, you are. He don't remember me, bro. It's crazy. Of course I remember you. And we have like a high school reunion right now. Jesus. This guy, we gotta stay focused now. We gotta stay focused. Markets are live. Markets are live. But that's good. That's good to see you guys though. How'd you guys even find out? Is it the post on my Instagram? Dude, I was so confused. What broker do you use? I don't really trade a broker. Oh, I guess it's Tradeovate. Tradeovate. Where is it at? Tradeovate. This one. This is the broker, Tradeovate. Yeah, you're Instagram publisher trying to find friends I trade too. Yo, who is it? Just you, you and Kanye that trade from you guys' group, or is there? What quote? Okay, let's look at what's happening on the we're about to close actually about to close this 15-minute candle here in about like 20 seconds. It appears that we will probably take out that 15-minute candle's high here. Let's see, yeah, we're probably gonna take out that 15-minute candle's high and maybe attack this 30-minute high as well. So let's go on the minute time frame and see. Is this something I'm willing to take here? No, I just. What's up, boy? Why'd you wake up?
7 o'clock.
You did not wake up at 7 o'clock.
I did.
Really?
I just went back to sleep until 8 o'clock.
So that means you actually got up at 8 o'clock.
No,
What were you doing for an hour then?
7 o'clock. I checked the time and it was 7:11.
Alright, let's go back to that 15-minute time frame. See, so like, there's not really any, like, see how we can create that, like that almost that paint that picture, right? This 15-minute candle here. It's if you align it with this 30-minute high as well. So based on that 30-minute candle's closure, we can anticipate for us to take out that candle's high, but you want to have confirmations on the lower time frame. And the reasoning why I didn't take anything there is because we don't have any fair value gaps on the lower time frame here. So there's no fair value gaps on 5-minute or 4-minute. On the 3-minute, there's this smaller one, but that's like literally at the low of the, yeah, that's literally at the low, and that's not created with the leg up. So there's no, you know, fair value gaps in that leg up. On the 2-minute as well, there's this one, but like I said, there's no, it's not a part of the leg up, like this leg here. It's a part of this leg. So probably not gonna take anything based off that. And like I said, just continue to just watch PA. I need to find a quote now though. So Monday we meet again. We will never be friends, but nobody can go back and start a new beginning. Everybody. Let's go with this one. That one sounds good. That one sounds good. Arnold Schwarzenegger. Whoops. So that narrative right there that I was just pointing out actually did end up playing out, but look at so notice how we took out that 30-minute high, right? That 15-minute high. So let me zoom into there's that. So based on this 15-minute candle, right? That 15-minute candle right here, we can anticipate for us to take out this 15-minute candle's high before we take out that low. That's essentially a trade idea for us to take right there. So that 15-minute high would have been the target for the objective for that trade, and you know, terminus or whatever, we can take off partials at the 30-minute high too. So based on that 30-minute high, we can anticipate for us to take it out. And let's see if we can get, you know, displacement away to target the 4-hour high. Oops. Not really A plus. All right. I'm gonna be back. I'm gonna go get something to eat because I gotta go hoop later. So yeah, I'll be back. So it appears we are actually like I said, like, so now the 15-minute is starting to be in line with the 4-hour objective here. So if we can get an entry, let's say this 5-minute creates a fair value gap, right? Then I would take my entry and target that 4-hour high if the 15-minute aligns with the 4-hour objective in about like 5 minutes. So we'll see based on the closure. But if we take out that 4-hour high, then to be honest, I'll probably close the charts and end it for the stream today. But we've yet to take out that 4-hour high. But if we do, then I'm gonna consider turning off the charts for today. Turn off stream. Whoops. So it looks like we are about to create a 5-minute fair value gap here. And if we close on this 15-minute candle right now, I can anticipate for us to take out that 15-minute candle's high, right? And because I have that in mind, I can, like I said, structure my trade off of that. And here on ES, I'm anticipating for us to tag previous day high here on YM as well. We are also looking pretty bullish. So all of the indices are now bullish. So I'm actually going to consider taking that trade there. Wait. Oh my goodness, no way. I have to go into... Okay, let me... Alright, so I actually have a I have a trade setup here now to attack that 15-minute high, like I said, and that 4-hour high. That DOL basically means draw of liquidity. So I'm anticipating for us to retrace into that 15-minute or 5-minute, if we can get a retrace into that 5-minute FEG. And I'm anticipating for us to retrace it there and attack the 15-minute high and attack the 4-hour high as well. That is my idea. And let's see if we can get an entry. So we just got tapped into the trade. So I'll be taking off 4 at the 15-minute power of 3. So the 15-minute high, I'll take off 4 there. And at the 4-hour high, I'll take off 2. And once we take out that 15-minute high, like I said, stops and move to break even. Yeah, it looks like like I said, we have alignment with all the indices here. My higher time frame objective, like I said, is to take out that 4-hour high here. So I'm anticipating for us to take out that 15-minute high. And once we take out that 15-minute high, it's when we can, that's when I'll move my stops to break even. And then I'll let my runners run. Yeah, let's just stay on the 15-minute time frame. There's no need, like I said, I already got my entry. So now I'm just gonna wait to see if my objective is gonna get taken or not. Gotta be content with the trade outcome. That's just how, that's just how we, how we have to program our heads. And you just gotta be content with the outcome. ES did take out that swing high, so now I'm trying to see if will NQ respect this, because ES actually did take out the swing high here. So now there's like the SMT now, but I don't think this is gonna be SMT. I want to see us play catch up on NQ. But if, like I said, if we get stopped out, we get stopped out. And this, which is why you have stop losses in place. You gotta get something to eat first before you watch anything. Did I just get stopped out there? Okay, I'm actually super close to getting stopped out. So the thing that I am now looking out for is, look at how ES took out this swing high, right? This swing high, once ES took out this swing high and retraced back lower, that's not good. So I'm actually gonna mitigate risk, because like I said, NQ should have followed suit, right? So here I'll take off 3. Okay, we actually just got stopped out even before I could mitigate risk. So now I have to reassess, right? We had SMTs here now at the highs. So I should have taken off something after ES took out that swing high. And I think this is a trade that I would take, I think, to be honest, all the time, because we have aligning time frames. It's just, you have to understand that not every single trade that you take is a will be, you know, a winning trade. So yeah, there's that. Let's see if we can get retry, if we can get closure back above it again. But I will be leaving the stream soon, because I have to go to the gym soon, so I'll probably turn it off. Probably in like 10 minutes, maybe, after this closure, or after the hourly closure. What I don't want this to be is actually me getting whipped out again. So let's see what happens. My bad, y'all. I'm low-key eating up a storm right now, so my bad that I'm not talking. Bum bum bum. All right. I'm actually gonna call it a day here today. I actually gotta go somewhere like right about now. Thank you guys for tuning in. I'll do a trade recap over the trade today. This is like these are the types of trades that I would take every single time, 10 out of 10. It's just, like I said, it's a game of probability, and as traders, we do our best to manage the risk and execute on our strategies. And with that, I'll catch you guys later.